we have seen this ongoing race in the chip sector. And of course, right now, accusations about how China really got its hand on these advanced chips. What do we know at this point?
That's right. That's right. Thank you for asking. I just had the opportunity to edit that story, this scoop out of our team around the world. This is showing that U.S. Officials are very skeptical about how DeepSeek got its technology. This is a technology that DeepSeek says is cheaper. It was less expensive to develop. And now rivals like Microsoft and OpenAI, as well as U.S. officials, including the FBI and the White House, the Treasury Department, are looking into where did they get this technology? Did they build it on the back of U.S. technology, more advanced technology? And did they obtain chips from Nvidia through Singapore, through third parties in Singapore? Did they obtain chips that are not supposed to end up in Chinese hands? Those are the questions that right now U.S. investigators are looking into.
Seeing some big moves when it comes to this space at the moment. Obviously, South Korea just coming back online after those holidays, Tom. We're seeing SK Hynix shares sliding over 10% as the Korean market gets its first chance to react to all of this, in addition to, of course, what we're seeing at the moment, which is the launch of this investigation into whether DeepSeek circumvented those US restrictions. So at the moment, the debate, Tom, seems to be, was this really a case where scarcity boosts innovation and brilliance, or whether this, was a case of something else going on? But is there a real question as to whether ongoing US curbs on this technology have run into limitations?
Right, exactly. I mean, the U.S., as we've been reporting, has for several years now been placing restriction after restriction on U.S. technology chips. They went after one level of Nvidia chips, and then they went after another level, and they continue to ratchet up the restrictions because they want to make sure that companies in China are not obtaining this technology to advance their chip-making capabilities. They talk about it from a national security perspective. You could argue that there's also a competitiveness question here, and wanting to ensure that U.S. retains its edge in certain key areas like chip-making, as well as some areas of artificial intelligence. When DeepSeek hit earlier this week, as you'll recall, it sent shockwaves around the world, and it raised questions about just how far the U.S. is in generative artificial intelligence, the development of these chat bots that are making our work so much more efficient, that are making it easier to do coding. If a Chinese-based company can come out and say, we can do it at a fraction of the cost, we can sell it more cheaply, our tools are more efficient, and those are all the claims that are being made about DeepSeek, that has definitely raised questions about, one, the amount that we're investing in global infrastructure, in chips, all these billions of dollars that SoftBank and Meta and company after OpenAI, Microsoft, company after company are spending. Should they be spending that much money? So that's one set of questions. The other set of questions, as you alluded to, is, are these curbs that the U.S. is putting in place, are these limitations on NVIDIA chips, for example, are there ways that the Chinese are circumventing those? And can they use third parties in Singapore, for example, where we have seen a lot of, and we've been writing about a lot of Chinese companies, startups have been moving into Singapore. What the U.S. wants to know is, are they getting their hands on this stuff illegally?
A pair of U.S. Congress is urging the administration of President Donald Trump to think about limiting the export of NVIDIA's AI chips, claiming that DeepSeek, a Chinese AI company, has depended on them. As part of a review led by the State Department and Commerce Department that Trump ordered to examine the U.S. export control system in light of developments involving strategic adversaries, Republican John Moolenaar and Democrat Raja Krishnamurthy, who are in charge of the House of Representatives Select Committee on China, requested the action. In a letter dated Wednesday, they wrote to National Security Advisor Michael Waltz, "As part of this review, we ask that you consider the potential national security benefits of imposing an export ban on NVIDIA's H20 and other comparable chips." They said in the letter, which was made public on Thursday, that a very advanced AI model that DeepSeek just released heavily utilized NVIDIA's H20 processor, which is presently exempt from U.S. export regulations. After DeepSeek announced this week that its free AI helper utilizes less data at a fraction of the cost of incumbent firms' models, potentially signaling a turning point in the amount of investment required for AI, The letter reflects growing worry in Washington about China's rapid breakthroughs in AI. The chief administrative officer of the U.S. House of Representatives warned congressional offices not to utilize DeepSeek in a separate notification published on Thursday, according to Axios. According to the warning, DeepSeek is now unauthorized for official House usage and is being reviewed by the CAO. Former President Joe Biden led a set of actions to restrict China's access to AI chips and the equipment used to produce them, because the United States is concerned that China may use AI to launch aggressive cyber attacks or possibly create a bioweapon. As it takes its own approach to AI, Nvidia said in a statement that its products comply with all requirements set by the government and that the company is ready to work with the administration. Trump's administration is considering new restrictions on H20 chips, which may be used to run AI software and were created to conform with current U.S. restrictions on shipping to China, according to a Reuters story on Wednesday. Trump took office on January 20th. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
President Donald Trump has weighed in on DeepSeek's breakthrough at a Republican Party retreat in Florida. Now, he welcomed its arrival, but also delivered a warning.
The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser-focused on competing to win.
Well, let's bring in Bloomberg's EMEA News Director, Roz Matheson. Roz, we'll get on to, of course, some of the DeepSeek news that really roiled markets in just a second. But Donald Trump was also quite clear on wanting to introduce tariffs on certain industries. I'm not sure who they're levied to or whether he'll actually come through with it.
Well, that's right. This is all this sort of noise around, will he introduce tariffs? When will he introduce tariffs? How much will they be? And how quickly will they move? And obviously, we reported earlier this month that there were a number in Donald Trump's inner circle, including Scott Bessent, who's the incoming Treasury Secretary, advocating for a gradual approach, like maybe starting with a number between 2% and 5% and then going up on a monthly basis. So you want to see whether, countries respond to that initial tariff, that blanket tariff, and then how can they negotiate from there. And so further signs again overnight that might be what Scott Bessent wants. But clearly the message each time from Donald Trump on the back of that is, hang on, I'm looking at some pretty serious tariffs here. And he really wants to keep that option open. I mean, even if they end up with gradual tariffs or no tariffs at all, he wants that as a tool of leverage right now. He wants that hanging over people. You can see that's why the market is kind of whipsawing around quite a bit. But it's clear he wants that in the toolbox. And we saw from the example on the weekend of Colombia that he's very, very willing to use it if need be.
But Roz, so I know it's difficult to find a Trump whisperer to really understand how far he's ready to go, but he's basically saying to the pharmaceutical companies, look, he wants to compel them to bring manufacturing in the U.S. So if a company says, I'm going to add, 5,000 jobs to the U.S., is that enough? Do we know what the threshold is, or is it just impossible to tell?
Well, certainly you want to show that you're doing something, be it building factories, bringing jobs back. And if you can make that number as big as possible and make it sound really good, the better. I mean, we saw Saudi Arabia recently pledging to spend a lot of money in the US. How much of that is real or feasible? Perhaps it doesn't matter because it's a really big round number with a lot of zeros after it. And that's what really counts in the end. So if you're a company, what you do want to show is either talk up your existing manufacturing there, show what you're already doing, and then add on to that. I mean, you can promise factories that could be built in the next 5-10 years and don't have to necessarily eventuate if you're really wanting to try and manage Donald Trump on it. But it's about just showing him that you are listening to him is the key.
Roz, I keep on hearing that, the last 10 days were frankly a whirlwind in terms of executive orders, in terms of policies. I mean, will this administration have to slow down? Does he have the team around him now put in place? How do you see it going in the next 2 months?
Well, obviously he wanted to demonstrate a lot out of the gate, and he was doing that even with some of the things he was announcing and saying overnight. So he's obviously trying to move what he sees as democratic officials out of the machinery of government, out of the bureaucracy, out of different ministries. He's got work to go there. He wants to demonstrate very much on the immigration side, so he's pushing on migration. But, he's trying to do a lot in quick succession. At some point you do need to see, do these things, have they had an effect? and then go on. But obviously he is trying to demonstrate he's as good as his word on a bunch of things.
Roz, thank you so much. Roz Matheson.
The IT industry has seen a significant upswing driven by artificial intelligence, AI, which has raised important market indices. The tech-heavy NASDAQ composite has soared more than 26% over the past year, while the S&P 500, which is highly affected by tech titans, has increased by around 22%. Market analysts had initially projected that reducing inflation and possible rate reduction would boost demand in growth choices for 2024. AI, on the other hand, has magnified this anticipated interest into a surge of confidence that has spread throughout the economy. Although IT stocks have benefited the most, AI is becoming more and more prevalent in sectors including manufacturing, supply chain management, retail, entertainment, and transportation. AI investment is rising quickly in a number of industries. Global companies are expected to spend up to $1 trillion on AI infrastructure over the next several years, according to a recent Goldman Sachs analysis. AI businesses are seeing an increase in venture capital, VC financing. Around 200 investments involving AI were made by VC firms in the first half of 2024 alone, contributing close to $22 billion to the industry. With business values reaching over $1 billion, the average AI startup investment round now surpasses $100 million. On the other hand, non-AI firms are valued at close to $200 million and usually receive $20 million in funding, demonstrating AI's enormous attraction to investors. Businesses who were early adopters of AI have benefited greatly, especially those that focus on generative AI technologies, graphics processing units, GPUs, and AI chips. In the S&P 500, the median returns of AI-related companies are 20%, while those of non-AI stocks are only 2%. Additionally, 90% of the returns on the NASDAQ Composite Index can be attributed to AI businesses. It is anticipated that these advantages will propel profits growth and support a wider development of the economy. AI is expected to automate 25% of all job processes during the next 10 years, raising U.S. productivity by 9% and driving GDP growth by more than 6%, according to Joseph Briggs, a senior global economist at Goldman Sachs. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Independent global markets as his cost-efficiency AI model is likened to that of OpenAI in terms of capabilities. Now, the release of R1 has sent shockwaves through the U.S. tech industry and posed significant challenges for Nvidia. Let's get the view now from IPEC. Oscar Descaya, senior analyst at Quizcode. IPEC, thanks so much for joining us. Does this change everything for AI, or do you have many questions on the Chinese model?
Well, actually, it does not change everything for AI. So first of all, I think that everybody should calm down. What we saw yesterday, the market rose, was obviously amplified by the high valuations of the US AI stocks, also the existing worries regarding the massive cost of investing in AI and the unsatisfactory return on investment so far, especially last year. But looking at DeepSeek, we have a lot of unanswered questions out there, including whether the DeepSeek's model is integratable, for example, with the other applications. We will see that very soon, reportedly from February. But we don't even know if they really built a model of less than $6 million as they say they did. What we understand is that the DeepSeek company, they use a lot of Nvidia chips, cheaper Nvidia chips, but Nvidia chips still, to build their model. So the simple idea that we could do a performant AI model at cheaper price is obviously waiting on the revenue outlook for many chip companies out there. But I think that it's very early to talk about a threat on the AI dominance and a game-changing model from DeepSeek.
Yeah, and IPEC, I guess, I mean, you say it very clearly, right? It basically brings, you think, an equal performance just at a cheaper price. What are the market implications of this? Are we going to see more demand for some of the cheaper chips? So Nvidia loses out, others gain.
Well, first of all, the idea that we would see a growing demand for cheaper chip makers was already there. So the idea that someone could create a well-performing AI model with cheaper chips only strengthen our conviction that this will be happening probably sooner than we thought. But looking at Nvidia, a company like Nvidia is putting out the world's best performing chips, and they're basically selling these chips to the world's biggest technology companies. And these biggest technology companies make up to 50% of their revenue in the third quarter of last year. So basically, these companies are probably not going to settle for cheaper chips because they're looking for disruptive innovations. So I think that Nvidia itself, the high concentration of these big technology companies in Nvidia's client book will probably now be all of a sudden a good thing for Nvidia that could help the company weather a potential demand shock for its expensive chips. And for the other companies, I think that the fact that the idea or the possibility of making well-performing AI models at cheaper prices will simply increase and accelerate the adoption of AI, and it's going to increase the demand for chips. Maybe not Nvidia's high-end chips, but chips still.
Yeah, and Ipek, I guess one of the other questions is that, we've long heard that some of the big companies want to do their own chips. So if there's a way of doing the same models with cheaper chips, is it easier for some of the big tech to go into that space and win?
Well, I think that one of the biggest threats for Nvidia, rather than cheap chips, is the possibility of these AI companies, the ambition of the biggest technology players like Google, like Meta, to produce, to build their own chips, as you say. And in that sense, we really think that, yes, it would be a great thing if they could do that on cheaper chips. But it would be even better if these companies that do have the means to do the best of the best could do that on the best chips out there. So when you're talking about innovation, disruptive changes, well, you maximize your chances of getting there faster by using the best tools out there. So I don't think that these companies will be willing to settle for cheaper options just because it costs less. But it all depends on how investors see it, of course.
Ipek, thank you so much.
According to Philippe Lafon of Coatu Management, artificial intelligence may mark the beginning of a new supercycle in the technology sector. The emergence of personal computers in the 1980s, networking in the 1990s, wired internet in the 2000s, and mobile internet in the 2010s, which ushered in the cloud era, were examples of earlier cycles. But this time, businesses are explicitly connecting AI investments to revenue production, offering a financial safety net that wasn't there in previous cycles, according to software and internet specialists Kash Rangan and Eric Sheridan. The industry's attention has moved from software to AI hardware and infrastructure since OpenAI's ChatGPT launch in early 2023. Since Q1 2023, the combined market valuation of AI infrastructure businesses has increased by around $6 trillion. Prior to widespread AI automation, which MIT economist Darren Acemoglu predicts would take over 10 years, AI infrastructure is growing in sectors like utilities, energy, the internet, and industry. It's interesting to note that businesses in these industries that promote AI development have reported profits that are comparable to those of conventional AI companies. Investments in the utilities and energy sectors are also being driven by the rising demand for AI-powered data centers. Carly Davenport and Alberto Gandolf, analysts at Goldman Sachs, predict that the deployment of AI will lead to a decades-long spike in electricity usage. However, because of supply chain limits and regulatory restrictions in the utilities industry, it is unclear if the expansion of AI will coincide with investments in energy infrastructure. Even if the required investments are made, it can take years before AI companies fully benefit from them. Fearing an AI bubble akin to the dot-com bust of the early 2000s, some investors are still wary. But according to recent research, AI values are much more realistic than those from the dot-com era. Software companies traded at price-to-earnings (PE) ratios of 132x at the peak of the dot-com boom, whereas the 5-year average was 37x in 1999. Even the largest AI stocks, on the other hand, had PE ratios of about 39x in 2023, with a 5-year average of 40%. These numbers support investor confidence in AI's long-term prospects by indicating that AI values are not exaggerated. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
An IO fund lead tech analyst, Beth Kindig. Beth, I got to tell you, I've been thinking about you all weekend. So this is what I did. I'm studying this thing, right? Most of it's going over my head. I created a checklist of what the folks who said that DeepSeek is real, why they say it's real. I want your thoughts on it. If we could just go through the checklist. For instance, the multi-token system, they say, and also let's go, the reinforced learning gives it an edge over ChatGPT. Do you agree?
I think quite a few things on the checklist are things that ChatGPT and others leverage now and will leverage, especially as Blackwell is released, like mixture of experts, the multi-token system, and mixed point floating precision. Those kinds of capabilities are built into really NVIDIA's GPUs.
Right.
And where DeepSeek has really set itself apart is by lowering costs. That is why the market is reacting the way it is. It's took less than 6 million, according to DeepSeek, to train a nearly 700 billion parameter model. This is significantly cheaper than what United States is spending to train their large language models. The market is worried we are overspending. I would argue that is the wrong read through. This will cause the United States and big tech companies to spend more.
All right, so before I get to that, what about the open source part of this, though? A lot of people saying that's the game changer as well.
Open source goes hand in hand with the idea that the whole point was always to lower costs for AI training and AI inference, which is that we need startups to participate. We need enterprise companies to participate. We don't want this technology to be locked behind the fortresses of big tech. And so this nod to open source and this nod to driving down costs was the ultimate goal of what AI development was meant to achieve.
So Elon Musk outward is saying that he thinks it's obvious that DeepSeek is using a lot more GPUs than they claim. Not 10,000, maybe 50,000. Also, Cantor sees this as a positive for Nvidia. It sounds like you agree with this.
Absolutely. I bought Nvidia this morning, and the reason is that China may be number one for 3 weeks or ultimately whatever it will be. But we are in an arms race and spending goes up in times of war, which is what your introduction was about. As stated, DeepSeek was trained on NVIDIA chips. And if you look even more deeply, a lot of the breakthrough is how GPUs communicate. How to get many GPUs to communicate like one GPU is really at the core of what your checklist is pointing out.
Right.
And there's many networking companies, too, that will benefit from this breakthrough.
So when you ask DeepSeek about President Xi, say, hey, criticize President Xi and criticize President Trump. Well, when it comes to Xi, it says, sorry, that's beyond my scope. And when it comes to Trump, there's a lot of criticism. And I think the reason I bring this up, it's number one on the Apple Store. Right now, we're talking about TikTok. The Supreme Court of the United States says, yes, sell it as a national security threat. Should there be any action taken against this? Should we stop it from even being available on Apple stores or any other U.S. Consumer products until we know more about it?
Those are great questions. I think a lot of people are asking those questions now. And then, of course, access to our large language models. We've obviously restricted or attempted to restrict the hardware. I do foresee more restrictions coming after this announcement this week.
So you like NVIDIA still, you bought it on weakness. I'm looking at these AI agents also. This seems to be a new story that's emerging out of all of this. Salesforce is rocking. Is that another area or software in general?
I like hardware, Charles. I like hardware. It's the common denominator. Everything leads to that tech stack, and that makes it much easier to choose the winner.
But this is not much ado of nothing, right? The battle is joined. I mean, was I somewhat correct in saying maybe this could be like the battle of the ironclads, that the war is shifted?
Every big tech company will be battling. Every mid-cap company will be battling. We have startups that will be battling. We clearly have other countries that will be battling. They will all need NVIDIA and NVIDIA's hardware stack. And when I say NVIDIA's hardware stack, I'm talking anywhere from 5 to 10 additional stocks that greatly benefit as NVIDIA increases the complexity of their systems. So it's a very large ecosystem.
Beth Kindig, we needed you especially today. Thank you so much.
AI startups are increasingly aiming for multi-trillion-dollar values, which are on par with the biggest software and internet corporations of today. With billions of users, hundreds of billions in revenue, and tens of billions in net profits, digital giants have grown their companies to previously unheard-of proportions over the last 10 years. Currently, a small number of companies hold 80% of the Fortune 500's capitalization. These businesses control sectors that AI is set to upend, including software as a service, SaaS, cloud computing, e-commerce, and smartphones. These companies are therefore actively integrating AI into their business plans in an effort to keep their market-leading positions. Nvidia reported GAAP earnings per diluted share of $4.93 for the fourth quarter of 2024, up 33% from the previous quarter and 765% from the same period last year. Non-GAAP earnings per diluted share were $5.16, up 486% from a year earlier and 28% from the preceding quarter. These indicators point to solid financial performance, fueled by increased sales and enhanced profit margins, setting up the business for long-term success. Additionally, record quarterly data center revenue of $18.4 billion, up 27% from the third quarter, suggests that there is a higher demand for data center goods and services, perhaps due to developments like the growth of cloud computing. For RTX AI PCs, Nvidia has also introduced AI foundation models. The latest GeForce RTX 50 series GPUs, which have 32 GB of VRAM and up to 3,352 trillion operations per second of AI capabilities, speed up these models, which are available as NVIDIA NIM microservices. In his keynote address at 2025 CES, CEO Jensen Huang emphasized the significant potential in physical artificial intelligence, AI, which is the phrase for machine learning models that can comprehend, navigate, and interact with the physical world. For self-driving cars and autonomous robots, NVIDIA provides a full-stack computing solution that includes integrated processors, software development tools, and supercomputing infrastructure. In the upcoming 4 quarters, Wall Street anticipates a 50% growth in NVIDIA's adjusted earnings. Because of this, the present price of 45 times adjusted earnings appears to be quite fair. With those figures, the price-to-earnings to growth, PEG ratio, is below 1. PEG multiples less than 1 are typically seen as inexpensive. In addition to the $1 trillion opportunity NVIDIA has described in accelerated computing and generative AI, Dan Ives of Wedbush Securities believes that self-driving cars and autonomous robotics constitute a $1 trillion opportunity for the firm. As a result, Ives believes that the Wall Street consensus may understate earnings by up to 30% over the coming years. I believe NVIDIA might reach a market value of over $4 trillion or possibly $5 trillion before the end of 2025, if it keeps meeting or surpassing earnings projections in the upcoming quarters.